FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is April 28th, 2020. Well, bubbles, they're bursting everywhere. You're about to hear from somebody who we've been talking about this trend with for years and years, and we turned out to be right on the money, or right on the default, that's for sure. Our good friend Gordon T. Long is with us now. Gordon, and welcome back. So student loans, we said, was a bust, a bubble that couldn't be sustained indefinitely. Here we are. We spent a lot of time talking about subprime auto loans, auto debt. That's blown up. Real estate debt, that's blown up. I don't know of a debt market in the world that hasn't blown up yet other than government debt, U.S. government debt, and that's probably on the way.
It's blown up, but just blowing up in terms of size. And the amount of government, we've got the balance sheet of the Fed's going to be close to $10 trillion here in a not too distant future, $4 trillion in the fiscal deficit this year. It's all in the word blow up. But yes, Terry, it's everything we've been talking about for years is just coming to fruition. We knew it would happen. We just didn't know what would trigger it. Turns out it was the coronavirus, which was nothing more than a pin that broke the bubble. All these things were ready to go. And Kerry, frankly, we're still early in this. There is a lot. I don't mean to be negative, but there's still a lot more damage. We're underestimating the magnitude of these problems, or the size of the numbers of bailouts and the size of the bailouts, whether we want to talk about the oil industry, whether we want to talk about state and federal and local budgets, and all their pension issues, and they're looking for bailouts, how long unemployment will be there, and the unemployment rates before we really get back to work. And it goes on and on. And then that's just U.S. When I spent a fair bit of time looking at it globally, and they're not reacting anywhere near as quickly as the U.S. is. And, we all know 50-60% of the S&P profits are coming out of international global. So they're there for a while. And, our markets are up. But if you look at the markets, it's 5 stocks, right? It's always the same thing at all-time highs. But if but the overall market is running with a forward PE of 20. That was higher than it was at the peak. But and so the U.S. market looks the best, but I just did some work on the FTSE all world, less the United States U.S. market, and it's definitely rolling over. You can see it because of the things I'm just talking about.
Yeah. So,
but Kerry, just before we were talking, all these things did happen, and it was this quote we mentioned on Vladimir Lenin. There are decades where nothing happens, and then there are weeks where decades happen, and that's just what happened. I mean, the regime change that we have seen, and that's what I would call regarding monetary policy and fiscal policy, is just incredible, and that is a discussion into itself. What's going on there, and I'm not talking about just the size.
It doesn't even look like there is any fiscal policy or monetary policy. It's all reactionary, isn't it?
Precisely. But we're doing things in monetary policy that we've never done before. We're doing, we've done U.S. dollar swaps, but we're doing them to every central bank in the world. We're lending out swap dollars secured against their currencies in a fiat currency base, which is, and we're now going to buy corporate bonds we've never bought before. We bought treasuries, of course, but we've never bought corporate bonds. So we're now buying, we're doing the swaps. And now with the Fed's lending money, 2.3 trillion on bailout programs, we're lending. We're down into, the highest level of junk bonds, BAAs that we're now lending against. What kind of collateral is that? So that's the first this is unheard of. Ever mind all the other facilities.
I'm aware of it, and
I know.
Shocking.
I know you are, but I think our listeners need to realize the new hurdles that we're going through, and I could get into the fiscal changes that we've never done before too. But what's really important here is if you go through I had done a lot of work on a fiat currency collapse. It's coming someday.
Mm-hmm.
It's a given. It's going to happen. When? Who knows? But I do know there's a very clear roadmap that if you study fiat currencies for decades, they've always collapsed in a certain sequence. And what we've done is we've moved from one level of gluttony, what they call gluttony, to another level of abuse with the currency. And abuse is when you start to really use fiscal policy. I'll call it helicopter money, MMT, whatever you want, versus just depending on monetary. And that's what we've done. And that is now a given. The next stage, what happens after that, we're not there, is we lose confidence in the systems, in monetary, fiscal, public policy leadership. And then that leads to stagflation because investment just doesn't flow, and it's been crimped for quite some time. And these are the stages. We're still a ways away that eventually leads to a lack of trust in the currencies, which you better than anybody are very familiar with.
Oh yeah. So helicopter money isn't a long-term solution. It's really shocking that the government has resorted to this, because we know long-term it's a failure, but they don't have anything else, do they?
Well, the one thing you can count on is the politicians will just print money or issue money. That's the only thing they can ever agree on, whether it's right or wrong. And the problem with printing the money, amongst many of them, is actually getting the money into the right hands. And so, I talk to small businessmen. Everybody is just screaming. They're furious with the government. They can't get, Morgan Stanley and all the boys, and I mean to pick on, they certainly got all their people in for the quick money, burned out the PPP right away. But all the small business, they got no cash. They got no revenue. They got tax bills, all bills coming in.
PPP was a fraud. Look, all the banks did, Gordon, was take all of their biggest debtors that they could shoehorn into it, even if they had to lay off employees to get under 500 employee maximum, and then put them into these loans, because they knew that by stabilizing their biggest borrowers, they would help ensure the repayment of their loans. And then you see, like AutoNation, each lot incorporated separately, all put in for PPP loans. And there was a rule change about controlled groups, and they changed it in the SBA, and that paved the way for all these companies to rape the PPP. And then the small business person gets an email back from them, sorry, we ran out of money. I can tell you, I've got the proof on one bank. They never even set up their public portal. And at the same time, they were making loans to their preferred customers. It's totally against the law, but none of that seems to matter anymore.
Exactly. The rats are deserting the ship and getting every dollar they can get. That may be a little hard, but it goes back to this confidence and trust. The anger that I am witnessing from small business and managers who believed in the government. They're not as close to it as we are in terms of reading what's really going on. And they're saying this is open fraud. What's going on in the swamp in Washington? And they're using words like that.
It's the swamp.
And Kerry, I don't know if you spent any time on all these facilities, the facilities that the Fed is using. They passed all of those over to the New York Fed, and the New York Fed has contracted every one of those out. So you've got people like BlackRock running 3 of those facilities. I mean, why don't you put the fox in the hen coop? You've got PIMCO running another one. You've got Citigroup and Morgan Stanley with other ones. Every one, because the Fed doesn't have the capabilities of doing this. I'm not trying to finger point at any of these institutions, but who's auditing it? Who's really controlling it in this urgency that's going on right now?
Nobody. The inmates are running the asylum. It's very, very clear.
It would appear it. Kerry, I don't mean to go on here, but because some of this stuff is just really annoying me. It's even how the Fed is giving them the money and where the money comes from, because basically we, the taxpayer, are bankrolling all of this money because the stimulus, the CARES Act, stipulates that the U.S. Treasury Treasury, and read that as the taxpayer, will provide the Treasury. Yeah, this is a cute trick. Are providing $454 billion of the $2.2 trillion total to the Federal Reserve. So that $454 billion is loss-absorbing capital to leverage the Fed's purchases of toxic debt from Wall Street to a maximum of 10 times, and that's how they get to $4.54 trillion. Who's on the hook for all? And Powell was very, very clear that the Treasury's on the hook for any capital losses. So these guys can lend it to anybody.
Yeah.
And who's going to pay? Of course, we said, okay, $454 billion. Suddenly when the losses are $1 trillion, what's going to happen? We, the taxpayer, will ante the difference.
Absolutely.
And that got no visibility. That's a fact. That I'm not making any of that. It got no debate. To me, that's something Congress should have debated for 2 or 3 days.
Yeah, most of them wouldn't understand it anyway.
Exactly. And that tells you right in a nut what the problem is.
Yeah, couldn't agree with you more. And so we always like to talk about solutions here, Gordon. What's the solution to protect your wealth, what little of it you might have left, and to try to get out of this thing still standing? Well,
actually, Kerry, when you know what they'll do, this is the best time to invest because you know where it's going. And they will continue to debase the currency and print more money. Now, the issue with that is most of the developed world is a fiat currency. They're all printing. So where do you go to? Traditionally, you go to hard assets. That is gold and silver. Well, we know the gold market is well documented as a manipulated market, so you have to buy physical gold if you can get it, and the premiums today are suggesting that is getting to be a bigger and bigger problem. But the point is not just gold; it's hard assets, and we've been talking about that for years now, Kerry. But the point is, it's now happening. It's now here, and over the next 12, 18, 20 months, it'll become more and more important that it's not the return on your capital, it's the return of your capital. And by that, I mean the value. What is sustaining the value in whatever you're holding your assets in. So looking at any investment that generates a positive sustained cash flow, even in a recession, is where the real value is. And good hard assets where you don't have any, they're not encumbered. And there's a long list of them. A vast majority of them are highly overpriced right now. So you have to be very, very careful there, Kerry. But there's a lot of smaller businesses in America that are going to do very, very well at the end of the day here.
Yeah, hopefully you and I. But you're going to see massive government defaults. Can they really allow the state of Illinois to file for bankruptcy or become insolvent? I mean, isn't that like a layman-like event?
You shouldn't have mentioned Illinois. I just get absolutely angry when they have destroyed the pension system. There is I don't want to use the words. It's people should be going to jail.
It's totally criminal. And Illinois has always been
run. And now they turn around and they have the audacity to asking for bailouts by the government. And they're the beginnings of everybody that's going to be coming because they're broke.
New York.
And a lot of the blue states are broke. And but Kerry, if you skin the onion and go down further, I'm really worried when you get down. I started here at the below the cities and the local governments, because they don't have the ability to print money. And they got huge bills. They're paying for all the first responders, the police, the fire. The money's going, the teachers that money's going out, and the money isn't coming in. And it's not just today, because when we get back to work, they're retail, they make money off commercial real estate. The offices we're into a Zoom economy now, and so more and more people have been forced. So the office space is going to be questioned, and it's already, as I just said, been in difficult times. So commercial real estate, retailers went online. We know the story there, but these are centers that create revenues in these small towns are gone. They can't jack up the tax revenues anymore on properties. Then we got more and the bigger issues in our town is people can't afford the housing, so it's all subsidized housing now, or apartments, and they don't get the same tax revenues from the apartment buildings, but they're being forced to have a certain percentage of them built in the various towns. At least these are problems up in New England. So they don't know where to turn. They can't float money for operating expenses. They can float it for long-term infrastructure, and they've been cheating on infrastructure for so many years. That is either the maintenance, the replacement, or putting any money into it. So they're going to need bailouts, and these bailouts are going to double or triple what we're talking about right now. That's what's the most frightening, and there's no solution there, Kerry.
Yep, and they're coming. And they might come with strings attached. They might come with strings attached, but big deal. The strings, I mean, so it's a good time to be a debtor and not pay, because basically everything is a moratorium on any enforcement. The courts are closed. The foreclosure process is moratorium there. Evictions, moratorium there. You can't collect any more money. You can't go to court. Well, the situation is serious. I should say this situation is hopeless, Gordon, but never serious. That's what my old law partner taught me. People want to find out more about what you're doing, get information from you. Where's the best place to go these days?
Thank you very much, Kerry. Videos and papers and free reports at MATASII. That's MATASII.com. Welcome anybody to join us there. Kerry, just a closing comment.
Yeah, sure.
We kind of said it before we started. 2008 was about too big to fail, as you recall. And right now there's just too many to save as opposed to too big to fail. And when I look at the whole global economy versus just the United States, which is too many to save because of these U.S. bailouts, it's too big to bail. Yeah. And that is the global impact. It just is too large. And I don't know how the central banks are going to get themselves out of it. So I think you're dead on what you just said. There's an era here of where debt, people are going to be bankrupt, people are not paying.
Yeah, hell yeah.
And they're going to default intentionally. It's already begun, by the way.
Yeah, we know that. There's not even a question. It's going to happen. And it's a good time if you can borrow to be a debtor, and think about it. Anyways, Gordon, we will talk to you again real soon, and thanks so much for catching up.
You too, Kerry. Stay safe.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.